pretty
Okay,
good.
yeah.
And
Do you get like the full raw video? Like, is it like a proper
yeah,
widescreen?
the 16 by 9 or 9 by 16. I always get them confused.
Yeah. So it's not just
But
like this little square that I can see now. It's the full.
no, it's the full picture. So yeah, you can put it into YouTube video or whatever if you wanted, and yeah, it's good.
That's epic.
So yeah, we'll
So I just finished talking about the numbers not to look at.
yeah.
Maybe if you wanted to ask like what numbers should they focus on instead, I can jump back into that.
Okay. Yeah. So yeah, we're just focusing on the metrics that you should be focusing on. And now what sort of metrics should e-commerce brands be looking at instead to progress their brand?
I think the sort of a better number to give an overall view of profitability, and rather than revenue is misleading. I think gross profit is probably the first sort of point of call to look at. So gross profit is essentially just like what is left over after paying for the product costs. So you have your revenue and then you have to pay for the product costs, and then you sort of get your gross profit after that. So that's a more accurate way to assess success and growth. And you can sort of, I think that's a better metric to compare your ad spend on. So rather than comparing your ad spend to revenue, comparing your ad spend to gross profit is going to give you a lot more clarity when it comes to what ads and what marketing efforts are working.
Yeah, because I know, like being a Facebook advertiser myself, we look at ROAS quite a bit, and it's starting to be a bit of a taboo metric to look at. Things like MER and then attribution, like cross attribution, whether it's Facebook and TikTok overlapping or Facebook and Google or all overlapping, and actually reporting figures in their dashboard that are higher than the Shopify revenue, which is a real pain in our ass. So taking into account that gross profit and talking about metrics like MER can really help the business drive forward.
Mm-hmm. Yeah, definitely. I think the nature of the product as well is going to skew what MER means and what the ROAS should look like. So, for example, if you had like a product which is a really low margin, so like the first thing that comes to mind is like a grocery store. Maybe not the best example because it's not necessarily e-com, but grocery stores don't have massive markups. I think Costco only marks up like 18% or something. Whatever it is, they add 18% or 15% around that. So they're super tight margins that they have to be playing with. And so if you're reporting a 3x return on ad spend, you're spending $100 to make $300 revenue, but $300 revenue for them is not is like $260 of costs of the
Yeah.
grocery products they have to worry about. And so you're losing money by acquiring new customers. Where if you compare that to a sort of an ecom client that I'm working with currently, their margins are about 50%. So the same situation, three times ROAS, $300 revenue, $150 in costs. So it means they have $150 in gross profit minus the $100 ad spend. You get $50 profit after those marketing efforts. So the gross margins and gross profits greatly make a difference to your return on ad spend and what you can spend there.
Yeah, and it sort of depends on what stage of the business you are in as well, whether you're in a massive like scaling phase and you want to get ahead of the competition, or maybe the economic situation at the moment is sort of making you think about maybe keeping some more profits in the business, and you're probably not going to go as hard on new customer acquisition. You might focus on retention marketing instead, like emails, marketing to that existing customer base. So when you're looking at, say, new customer acquisition cost, do you take into account, obviously, AOV and lifetime value, and how do you sort of track those metrics from your end?
Yeah, that's a great question. I think the sort of key thing to think about with lifetime value is we want to be calculating that on a gross profit lifetime value. So not how much revenue do we derive from one customer, it's how much gross profit do we derive from that customer. And that's going to be a big difference. But that allows us to then think about how long it takes to pay back the ad spend. So to explain that a little bit deeper, let's think about a CPG brand. So maybe it's a supplement company or something like that, something that is consumed and maybe reordered quite regularly. Let's just say that we want to aim for the first time that we acquire a new customer, we want to break even on that, meaning that we're not going to make any profit. We're going to, but we're going to acquire this new customer and hope that the second and third and fourth time that they purchase from us, that's all profit. And so being able to just understand what the lifetime value is and sort of what is the retention habits of each new customer and each new cohort is going to give us a broader strategy of how we can actually afford to acquire new customers. Or if we don't break even on a new customer for 12 months, maybe we need to think about getting some loan facilities or some good credit cards in place that can just give us a little bit more time until we do make profits from each customer.
Yeah, now from my end, that sounds like a pretty risky game to be playing, spending money before you have it. How do you sort of forecast for e-commerce businesses with seasonality, depending on the product, obviously? But yeah, I find it really difficult. Like, obviously, forecasting is a pretty scary thing. You like to typically overestimate what you can achieve and then sort of the results, which is good to be optimistic. But I do find a lot of brands are maybe a bit too optimistic. How do you sort of combat those issues when you're talking to e-commerce brands?
The first thing I'll do is actually just get all of their data from Shopify. If they're doing wholesale, like through Fair or some different platforms, Amazon, and we actually just want to look at like what are the habits of their current customers, their current cohorts. So an activity I do with lots of my clients is we look at for all of the customers that were acquired in October 2021, what have they done since then versus what about the customers they acquired in October 2022? What are the sort of the habits and what has changed in those 12 months? Are people, is their first order worth more? So is can we see that the average order value has gone up in those 12 months? Or are our current customers not repurchasing as much as what they were in the past? What's changed? Is it a new product? Is it a worse product? I think looking at the trends of the different cohorts, we call it. So it's like a time based customer acquisition group. Um,
Like 30, 60, 90-day cohorts or?
yeah, exactly. Yeah, it's similar to sort of that Facebook terminology, but like what you can split up cohorts in thousands of different ways. But how has the habits of your customers changed over time? Are people buying more now? Are they spending more money with you? That's sort of the best way to sort of be able to sort of predict what's happening, um, and then to then build on top of that to actually forecast out. We like to derive it straight back down to what are the things that you can control and the the levers that you can pull to grow the business. So is that ad spend? Is that ROAS? Is it creating new creatives? It's the things that you can control is going to make the difference and make it easier to forecast.
Yeah, and obviously there's a lot of things going on in the world right now. Like inflation's a very big topic. There was some bank runs over in the US as well and stuff like that. And like from what I'm seeing, like it isn't a very positive world at the moment. And obviously businesses are still trying to grow, and we're talking about lifetime value and stuff here. But have you seen any industry trends comparing like when people were buying, say, in the middle of lockdowns compared to, say, now?
Yeah, there was a lot more money being thrown around during lockdowns and over the last couple of years, and it started to slow down. Obviously, with inflation going up, interest rates going up, people have less consumable dollars, less money at the end of the day to spend on things that they like, not things that they need. So some brands are finding it tough to battle with the rising cost of living. But I think just being able to stay on the front foot and being profitable first comes back to having a sustainable business.
Yeah, I was speaking to a brand yesterday, and then over that like sort of COVID time, they had like $1.5 million in abandoned carts. And I was speaking to her yesterday, and her conversion rate was only at 0.3%. So even if she like had a 40% reduction in sessions now, and maybe not as many people going to the website or whatever, if she invested in getting a new website and improving her conversion rate, like her business and her advertising efforts could actually be reduced, but that efficiency could be improved, and it would definitely improve her profitability if she was able to convert at a much higher rate. Even if it jumped up to a 1.5, like that's still a massive increase on what she's currently returning. And I, like from my experience and looking in the back end of Shopify and ad accounts and that sort of thing, there is a lot of things brands could be optimizing to improve their performance. And it's not always having to spend more on advertising. Like you could be spending improving your website or improving like your graphic designs or your ad quality and stuff like that to help improve the efficiency of what you are currently spending.
Yeah, exactly. And I think there's all these like great things that and all these great opportunities that brands have to be able to optimize, but fundamentally you just got to make sure that the product is profitable first and make sure the brand is profitable, because if you're scaling something that isn't profitable, you're just going to be going bankrupt quicker.
Yeah, it's like a lot of drop shipping brands that started during that time, and all that cash was being flogged around everywhere, and the crypto markets were skyrocketing as well, and everyone was sort of making money without really knowing why, the reasons why people were actually buying during that period. So now it's coming back, and I'm starting to get a lot of businesses coming to me and saying, "Hey, we're down on last year. Maybe some are breaking even, and they think it's the end of the world." But when you take everything into account and maybe a bird's level overview of the whole business, maybe it isn't so bad given the situation that we are in. And if you do have a quality product, like my clients are still growing no matter if like obviously there's more money being thrown around then, but they're still growing because they really know their numbers and what they can to spend to acquire a customer.
Yeah, I think there's all this low hanging fruit. So I don't know. I was speaking to someone this week, and they have over the last couple of years acquired 10,000 different customers, but have not done any email marketing campaigns. So
Yeah.
all of their revenue is basically coming from new customers and acquiring customers via Facebook and Instagram. But there's just about no retention, no repeat purchases, and so I'm just pointing a finger here going, this is such low hanging fruit. You spend a little bit of attention here doing some email marketing, and it's going to be profitable because the product's profitable, and there's no sort of marketing ad spend related to that revenue. So
Yeah.
I think brands just need to sort of step back and maybe think about what opportunities there are that they have, what opportunities they have available to them.
Yeah. Now, since you're an accountant and like to look at all these spreadsheets and profit margins and stuff like that, I saw you put out a Twitter post yesterday about a brand like they would have saved, like they saved money for hiring you for a consulting call for an hour because you found some unused softwares that were costing them like $300 a month or something, which is a couple of grand over 12 months. And that pretty much paid for your service straight away. So, what are some of the biggest areas you see in e-commerce's backends to say, hey, they're overspending in certain areas?
Yeah, I think like a lot of stores, um, I think they don't realize that they just forget that they've purchased software, or they've got subscriptions that are just automatically billing. And so yeah, we found over $300 worth of software they just aren't anymore using. A
Yeah.
lot of it were Shopify apps that were installed for their old website, and when they had a different landing page or a different theme for Shopify, and it literally just was inactive, and so they're just throwing money away. And so yeah, over 12 months we saved 3.5 grand or something like that. So
Yeah.
I think just being able to every now and then, once a quarter, just look at your bank statements and actually just critically think, do I need this? It's especially now, where costs are rising and all that. It's always good to spend 10, 15 minutes just looking at your expenses to optimize them.
Yeah, and then even for me, like I sit down with my accountant each quarter and look at the expenses, and I'm like, oh, what the hell? I've got this thing that's costing me so much, and then like I will go to AppSumo, which is a really good website to find cheap discounted softwares or alternative softwares that might be able to do it better, and getting those discounts and maybe paying for a yearly subscription or whatever. But then you can also get trapped into those yearly subscriptions. It's like with my Amazon Prime one, like I only get billed once a year. And it got me like 2 weeks ago, and I was like, oh, there goes another $100. But I'm like, well, I'm not going to go out of my way to go get a refund on that $100. Like, I'll probably use it over the next 12 months. But every time it comes out, I'm just like, I should have cancelled that.
Yeah, exactly. So just being on top of stuff like that definitely goes a long way. I think maybe one other area of attention that e-commerce stores and brands can work on is sort of just somewhat benchmarking themselves to their peers. So knowing that if you're a bedding brand, you're selling sheets and all this sort of things, literally just talk to some other brands about the numbers. Like, I think most people in the community are pretty open to helping each other, and so just ask like, oh, how much are your costs, and sort of just understand some things. If you're working with a good accountant, they should be able to point you in the right direction, maybe give you some ballpark figures to work from. One other hack that I like doing is looking at ecom brands that are for sale. So there's all these public listings of brands that are for sale. They usually attach like their profit and loss statement, so you can look at how much other brands are spending on marketing or on their product costs and shipping and all these sorts of things. So being able to read and understand profit and losses of other businesses can teach you a lot about your own business.
Yeah, and I think the e-commerce world is way different to the traditional business world because you're not competing with someone a couple of doors down. Like anyone I talk to on, say, Twitter or whether it's Facebook Messenger or even over email, most people are pretty happy to share what they're currently doing because there's so much money in the world, right? And everyone's like, there's enough to go around. Most people are happy to share insights into what's currently working with them. So, for example, Facebook ads at the moment, I'm finding images are working really well, and those providing those sort of insights and maybe some case studies and stuff like that to say, hey, this is working. Yeah, you just need to ask some questions and talk to some people and maybe get an industry group chat together and talk about what's currently working and stuff like that. Yes, they are competition, but at the end of the day, if you get some insights out of it and you can improve your business and maybe you can improve theirs as well. But at the end of the day, I think it's worthwhile networking.
Yeah, and even if you don't go into a networking session like that, wanting to pull information and understand their business and learn all these secrets, just making friendships like that can go a long way. Potentially, they might sell you their business in the future, or vice versa. Like there's 1,000 different opportunities, and as you said, there's a lot of money in the world, so there's no need to be so scarce with it.
Yeah, exactly. And we just found each other through Twitter as well. So, yeah, just giving away free advice on Twitter. Like, there's so much free advice out there, like even YouTube videos. And then you maybe watch a YouTube influencer for 6 months and you end up buying their course or whatever. Hopefully, you don't get a scam, but I've had some pretty good luck. But yeah, I think it's a good way to learn and show you sort of like a lot of businesses started a new business over that COVID period and they probably don't have much business experience. So learning from other people is definitely how you progress a brand forward. It's better to learn from somebody else's mistakes than your own.
Yeah, I think that's something I'm sort of learning at the moment as well. It's like the the best way for you to learn is actually just by doing. Like, figure out what are your problems and then just go and figure out a way to do it. Talk to people who have had the problems in the past, how they overcame it. I think just actually being in the weeds, you learn a lot more than just reading a book.
Yeah, for sure. Now, earlier we spoke about some business owners possibly worrying about tax minimization too much. And if you actually make more money and like paying more tax is a good thing. But what are some of the common mistakes you see around tax time with e-commerce businesses?
I think sort of, I guess like there's maybe 2 points that come up there. The first one just comes up to the structure that you start with. So in Australia, we have a few different ones. They're quite similar in the US or wherever you are internationally. But sort of the main one that you do want to set up from the start if you're serious about growing. If you want to be probably through a company. So that's a PTY Ltd if you're in Australia. There's like LLCs and S Corps or whatever in the US. I'm not too familiar with them, but you want to be thinking about these things now, before, like, right as early as you can. If it's before you start, great. If it's when you're pretty, maybe you've just tested the product and you're ready to scale, that's a great time to consider what tax structure you're in, because in the long run you'll save a lot of money on taxes once you're making all these profits and all that sorts of thing. um, Sometimes it can be too late. Sometimes it's not worth sort of restructuring. You just got to cop the tax bills. But there's always a way to minimize via restructuring. And maybe the second sort of common mistake that lots of brands come up with is just not putting money aside for their taxes. And yeah, the money that you make, the profits that you make, you do have to pay taxes on them. And more, just about 80% of clients that I talk to have debts with their respective tax authorities. And it's just due to naivety of being a new business owner, not sort of understanding how the tax world works, and when lodgements and filings due, and that you get charged interest on debts that are overdue, and those sorts of things. So as much, I sort of recommend to all my guys to put 30% of your profits aside for taxes. That's going to cover definitely all of your income tax requirements. But realistically, we probably should be doing more like 35%, 40%, because you also have things like in Australia, we have GST. Lots of business owners like to put aside their superannuation savings in there, because that's another thing you have to pay quarterly. So there's lots of these obligations that new business owners don't know, and they need to know, because at the end of the day, they're liable for these things. They are real debts, and you can get into big trouble if you neglect them.
Yeah, I got shafted a bit when I was first starting out. In my first couple of years, I was just a sole trader and didn't restructure soon enough, and I got hit with a pretty healthy tax bill, which I wasn't too impressed about. But since then, like, I can't understand people who don't put like money away for tax. Like, how scary would it be just sitting there for 9 months, and then all of a sudden it comes around to tax time and you're like, where the hell am I going to come up with this money? Like, I possibly owe hundreds of thousands of dollars, and I've got to pay all my staff. I've got to pay maybe some advertising spend to even bring in that extra money. And yeah, that's not a position that I'd like to be in, that's for sure. Like, I oversave. Like, I'm probably too far the other way where I oversave, and I don't have, possibly my cash flow is bad because of that, because I don't have those funds to actually invest in progressing the business, because yeah, maybe I'm a bit too cautious around tax time. So
I
there's a
think,
fine balance there.
yeah, it's you're good to be overcautious, because at the end of the day, it's still your cash, and you can pull from it if you really have to. If it's a dire situation, emergency sort of thing, like, you still have the cash there. It's still yours to use. So always good to be overcautious. At one of the last firms I worked at, we had a lawyer decided not to lodge their tax returns for 20 years. And so he got in trouble from the ATO, and he just brought in all of these shoe boxes, or file boxes with 20 years worth of income receipts, all these things. He's like, here, figure it out. And that's an expensive exercise for your accountants to do, because you're not going to be our favorite client if you give us 20 years of tax returns to do. And B, you're going to be paying a lot of tax all at once. And there will probably be a lot of interest that you'll have to pay on those debts as well.
So did he go to jail or anything like that?
I don't think so. I left that firm before it was all sort of finalized. I don't think he was necessarily in criminal trouble. But yeah, I'm not really sure.
Oh, giving out some good hacks here. I don't pay your taxes for 20 years, eh?
Well, there was a funny story about a man in WA, I think, who he went to a conference, and the conference basically told him taxes are optional, and he just decided he wasn't going to pay his taxes. Just didn't, yeah. it's a fake authority or whatever. And he ended up getting fined like $15,000 on top of all of the debts and the interest that he had to pay. So don't it is serious, it is real. So don't think that you can just not pay tax.
Yeah, no, yeah, I'd rather not have the government knocking on my doorstep, to be honest. So
Once you're
I'll
flagged,
keep paying them like a good little boy.
yeah. Once you're red flagged, they're going to be looking at you for your whole life. So just be a good boy.
Yeah, for sure. So, just a bit of a personal question, I guess, for sort of my agency. Like, what are some of the tax benefits you can get via actually running paid ads? Like, that can all be deducted and that sort of thing. And should brands like sort of spend more money at the end of the tax season, or how do you sort of look at that?
Yeah, I think in terms of timing and everything, like obviously all Facebook ads that you run for your brands and for yourself will be tax deductible. Um, I sort of always look at it from perspective of if you're going to spend the money anyway in the near future, you might as well do it before 30 June is our tax year here in Australia. You might as well do it then because you're going to get the deduction benefit sooner. Maybe a common example as well is paying superannuation early. So superannuation for a quarter is due the month after. So a common thing that people do is for the April to June superannuation that you pay for your employees, that's due by July 28th. But if you pay it in July and not in June, you don't get a tax deduction in the June year. And
Yeah.
so you have to wait 18 to 20 months before you get that tax deduction. So if you pay it 1 month earlier, you're getting a benefit 18 months sooner. So um, if you have the money accessible to pay for that, then that's a really cool advantage that you can take. A really cool thing you can take advantage of. Common things, like people ask about the end of financial year car sales. Can I buy a car now? Like Tesla, we don't have to pay. There's this FBT on electric vehicle benefits, and there's all these things that if you're planning on spending the money within the next couple of months, it might be worth considering doing it before the tax year ends.
Yeah. And this is probably why we see increased spending on Facebook, especially like CPMs. It's not as bad as Black Friday because like spends go through the absolute roof during that period. But the end of financial year, a lot of brands do dump their marketing budgets into it, and brands with some pretty large ones. And obviously, they've got some of the most highly paid accountants working behind them, and they're advising to do that. So, yeah, it sort of makes sense to me.
Yeah, and I think lots of the big corporates, they're given a budget for the 12 months, and if it's going to end in June, they're just going to throw whatever they have left, because they have to spend the money according to the budget that those ad managers or those account managers have been given, and so that's
Yeah.
why you might see those CPMs go up.
Yeah, I've had a few conversations, and yeah, there's been some pretty large budgets dropped, no matter the performance. I'm like, wow, what the hell? I wish I could get a hold of that account. Just drop like 100K, 250K, and not worry about performance because they have to spend it, and they're getting that tax benefit at the end of the day anyway. So it's worthwhile. You get the few million impressions and hopefully some conversions, but there are some big businesses out there that just spend because they have to, which is a pretty insane situation to be in, eh?
Yeah, I think like that's just comes with the scale of businesses, and sometimes if you're so profitable, you don't know, like ads might not always be profitable once you get to a certain size, and I'm sure you do see that as brands scale, it's harder to acquire new customers. You have to spend more to acquire new customers, and that happens at an even bigger scale when you talk about these massive, large public companies.
Yeah, for sure. And obviously, we're speaking a bit about planning and everything like that. How do you help brands forecast? Like forecasting's like it's not something that I do a whole lot of, and I sort of try to avoid it because it seems like a bit of a hassle and that sort of thing. So, how do you work around that?
There's a couple of interesting things that we need to think about when we're forecasting, and it probably does. And this is where like having a finance and accounting team that talks to marketing and understands operations and inventory and fulfillment and all these things. Like ecom is very intertwined. Like accounting does need to understand marketing. And so being able to understand seasonality. So, like for example, Black Friday, Cyber Monday, like being able to know that we need a lot of product, then we are going to be increasing our ad spend. Then being able to budget for these things months and months in advance is massive. Um, but even like being able to forecast inventory, so making sure we have enough inventory for what we're planning on doing goes a long way. Like you don't want to be in the middle of a massive big campaign and you run out of inventory because you're going to be throwing ad spend down the drain and not have any revenue coming in for that. So
Yeah, I've run into that situation a fair few times because, I work with small to medium-sized businesses, and those smaller ones, especially like with the shipping containers going absolutely through the roof cost-wise. There was a few times last year especially where we just ran out of stock. And I'm like, oh, geez, this was going so well. And then all of a sudden we have to turn off the ads because that we just sold out and we had nothing to sell. And they were like a bit cautious on their, they were a bit cautious and maybe a bit scared, economic environment and that sort of thing. Maybe didn't do enough preparation and looking into forecasting and stuff like that and what they could possibly see. And it's not it's a good situation to be in because you sort of hit your goals of like selling all the inventory, but what could have been, hey?
mm-hmm. Yeah, and coming back to that seasonality, I think just having sort of like a marketing calendar does go a long way. There's also guys on Twitter that talk about this, and it's sort of knowing what campaigns you want to have throughout the year so that you can plan and budget for them. So, Black Friday, Cyber Monday is always going to be a massive one on the calendar for every brand. But let's think about industry specific holidays or whatever that you can celebrate. So maybe if you're a dog harness and leash brand, when's International Dog Day? When's International Vet Day? Think about these other little holidays that you can build things around, or when are you going to be launching new products in the 12 months? And let's do a big advertising campaign around that launch. And being able to just sort of plan 12, 18 months in advance can help your finance function forecast for those things.
Yeah. And then what's sort of your opinion on discounting regularly? Do you think they bring in lower quality customers, or do they bring more brand exposure and the benefits outweigh the discount? Or what's your opinion on discounting?
Yeah, I'm not too rehearsed in the discounting world. Like I haven't really had too many conversations with my clients about discounting. But I think generally from a theoretical point of view is it will bring lower quality clients and customers, but it depends on your brand as well. If your brand is more about volume game, you probably do need to be discounting to incentivize those sorts of things. But it all comes down to your brand strategy at the end of the day.
Yeah, I know when I'm shopping around, like I'm a pretty big discount guy, and like on Facebook, if you optimize for traffic, like all you'll get is traffic and very little conversions to none. And then if you optimize for conversion purchases, like Facebook knows whether you regularly purchase. I would definitely be in the traffic campaigns and like this guy likes a good discount. But once I do get a hold of a brand, like I usually do stick with them for quite some time. So for example, the Oodie, I never brought an Oodie at full price, but I'd see a 20% discount, 40% discount, Mother's Day or Valentine's Day, or maybe obviously Black Friday, Christmas, those sorts of things, gifting. Like I'll come back and because it was good for me, I'll buy it for somebody else. And just give a good product at the end of the day is what wins, hey?
For personally, like I think discounting around holidays and around those celebrations and campaigns is the best time to discount. But just discounting for the sake of just hoping that a Facebook ad is going to convert better is probably not a long-term strategy that I'd want to stick with.
Yeah, for sure. And during those times, if you don't offer a discount, like you won't get any sales. Like we had a couple of brands to say, hey, I want to opt out of Black Friday this year, the sustainability aspect of it. And we'll just keep running as we were. And those results during that period, they definitely dropped off for sure compared to brands that did run that. Like they were generating 50, 100, 200% more revenue during that time. just because they ran an offer, and so much more brand exposure and stuff like that. So from my perspective, I think it's a pretty good thing. You might not necessarily break even, maybe it's a bit of a loss, maybe you do break even, maybe you make some profit, but I think in the long run, getting eyes on your brand is super important.
Mm-hmm. Yeah, I agree totally.
Cool. I sort of ran out of questions. I think I even asked that financial report one a couple of times. I think I repeated that, but you sort of gave a different answer.
Yeah, that's cool.
But yeah, I didn't like. Is there any questions that you've like popped into your head that you wanted to ask me, or maybe you wanted me to ask you? Or I think I sort of got through most of what I wanted to cover today. And we can always jump on another one and ask some different questions, or maybe even just a different style of question to get the same answer or whatever.
Yeah, let me look what you sent through, because what you sent through was really good. It was sort of everything I would have thought of as well.
Oh, that's good.
Yeah,
just a quick play around on ChatGPT for 10 minutes.
Love that.
I got the ChatGPT and I sent like those over to you. I was like, I can't be reading this while I'm on the thing, so I even had some even shorter questions on the note sheet.
No, I don't know. I can't really think of anything else. So
yeah, I think we covered quite a bit, and I think it should be pretty beneficial, and grab some few clips out of that for sure.
Yeah. I think.
How'd you find it?
Yeah, good. I think it was pretty conversational, pretty relaxed. So
yeah,
you're a good host.
Thanks. I think it comes back to being on sales calls a fair bit. I was no good back in the day. Like my first year, like 4 years ago, doing business, I was reaching out to physios and chiropractors and stuff like that, just some local businesses. And I think I had about 50 to 60 sales calls that year, or that summer or whatever it was. And I didn't close one of them. so very bad success rate, but I think I've got a bit better now. My success rate has climbed a bit. But so speaking to the camera, even doing reels and stuff, speaking to the camera gets it's a bit difficult when you're first starting and you're sitting in a room by yourself speaking to a camera, like even just making eye contact with the camera and then listening to your voice on record. That it just sounds shit.
So funny. Yeah, I've done a few YouTube videos like around accounting and tax, and definitely big learning hurdle.
Yeah, wait till you get like a few years down the track, and then you accidentally find one of them in Google Drive somewhere, and you open it up, and they just cringe.
Yeah, it's terrible.
Even if it was a good video at the time, you still look back on it and go, "What the hell was I doing?" We'll have to do this again sometime. And as for obviously, I will send you the full recording. So I don't think there was too much we needed to chop out if you wanted to use it as a YouTube video or whatever. Obviously, when we're just talking and that little, like obviously we got 2 recordings, so I'll send you the full audio recording. I'll get my guys to make a few clips out of this, and then I'll get some clips of you were speaking most of the time and I was asking you questions, so there'll probably be more clips for you to pull out of this. I'm not sure how easy Riverside is and what the quality is like, or if it's easy to add captions or whatever, but from what I've seen, it looks pretty good, so we should be able to get a fair few out of it. And I'll send you those clips that we get from this over to you as well, and you can do whatever you like with the recording.
Perfect. That sounds great.
Thanks for your time today, mate. And obviously keep in touch and keep posting the free value on Twitter as well. And like, how's your business going? You're growing from Twitter? You're getting a few inquiries, or?
A bit of a slow